back to Nigeria now. It's a big day for Nigeria's economy because first there starts a cost of living crisis, which we see the NLC taking to the streets. I think you've heard enough of that from Sunrise Daily, even had that conversation with the NLC president who is on the streets and from different states. So now let's go to the other big thing in Nigeria. So that's the MPC, the first under Mr. Layemi Cardoso. They started the meeting yesterday, and we expect to get the decision today. You shouldn't miss Business Incorporated starting from 1 to whenever the president, the governor of the CBN is done with the announcement. This is where to stay. But for this morning, let's look at some of those factors ahead of the MPC, the meeting, as they consider their decisions. And to do that with us is an economist, Mr. Joining us, Mr. Tilewa Adebajo. He's the Chief Executive Officer of CFG Advisory. Joins us virtually from Lagos. Mr. Adebajo, good morning and thank you for your time.
Good morning. How are you this morning?
I'm great. Thank you so much. So it's just a couple of hours. In fact, I think they started the meeting at 8 a.m. this morning. So as we speak, they're not watching or listening to us. They are very busy. What do you think they are talking about at this time, the MPC?
Well, number one on the agenda is inflation. Inflation has reached a high of 30%, and food inflation is close to 36%. Number two will be the foreign exchange. We have significant challenges with our foreign exchange in Nigeria. There's no doubt about that. And I think the central bank is at the forefront of this with its new market-driven foreign exchange mechanism and the volatility of the Naira, which has gone into free fall in the last week. That's number two. Then number three, what are your plans for growth? That's been very important to say. And then, of course, the central bank governor has already told us that they're targeting 21% interest rate, inflation rate by year end. So then the big elephant in the room is how much are they going to increase the MPR to be able to reach their inflation target of 21% by the end of the year. So I think that is really what everybody's looking to. How much is this rate increase going to be and what they intend to do about the foreign exchange system?
Some people are projecting about 200 basis points increase on the MPR. What do you see?
Well, last year, let's take a look at what happened last year. Last year, the whole of last year, on a gradual basis, MPR was increased by a total of 725 basis points. MPR has not gone up by for a long time. It's still at 18.5. Inflation is at 30%, according to official figures, but closer to 35% in reality. So what you are seeing is that we have a situation in Nigeria today whereby the gap between the MPR and the inflation rates is quite wide, and real rates are negative, and that's why we're changing foreign exchange. So if you also take a look at the money supply data, in 2022, just 2 years ago, money supply was about 40 trillion. Today, in January, it's 93 trillion. So it has more than doubled in 2 years, and it went up by 40 trillion alone between January last year and January this year. And of course, most of that is now because the ways and means, the 30 trillion, has now been reflected in the money supply data. So that is a significant amount of funds in the system that is chasing all kinds of things, including the dollar, because, you know, real rates and real yields are negative. So my own expectation is the fact that there needs to be at least a minimum of 700 basis points increase in interest rates from 18.25%, which is it is right now, or 18.75%, to at least 25%. In order for us to stem inflation and try to cool off what's going on in the environment today. That will be the minimum, in my own opinion, if you're going to achieve reducing inflation by the year end.
Well, I must tell you, Mr. Adebajo, that's the highest I've heard, because, you know, they also have to deal with the balance between causing a stagflation in the economy and also mopping up inflation. And when they go as high as 700 basis points, what do you think will happen to the real economy?
Well, we need to go through a period of adjustments. You can see that inflation is causing a lot of problems. Food prices, everything is going up. So you need to stabilize the economy on the short term, maybe within the next 6 months. And then, of course, once you stabilize, you can start bringing down rates. Nigeria is already in stagflation. Our growth numbers for last year was only 2.4%. So I think we understand that. So it's also important that we send a clear signal. Otherwise, your exchange rates are going to continue to go haywire. And, it's clear that this new exchange rate mechanism has not been able to take hold because of the volatility. So I think the only way we can stem the tide now and reach price and financial stability, which is the core mandate of the Central Bank of Nigeria, is for us to increase interest rates by at least 700 basis points.
What about the notion that a major factor driving inflation comes, from the fiscal side? And so even if you do increase MPRs, it may not reflect in dealing with inflation.
Well, you've raised a very good point. So the central bank also needs to advise the fiscal authorities of their own impact. Both the Minister of Finance has said they're going to audit the ways and means financing of the 30 trillion. And the central bank governor has made it clearly that there's no more room for ways and means financing. So I think that has been clear. So if the government stops that and they implement this Onosoi report and they get into some clear amount of fiscal discipline over the next 6 to 9 months, then we'll begin to see the results. There's no doubt about that we'll see the results. And these are the things that we need to do on the short term. Now, once we're able to achieve stability, then we can begin to cut rates. It's not rocket science. You can see now that in the Western markets, both the Federal Reserve Bank, the Bank of England, and the European Central Bank, their challenges now is after they've gone through a year of rate increases, and they've been able to cut inflation by at least 50% on all three fronts. What they're now saying is rate cuts is now a question of if, not when. It's a question of when they're going to cut rates, not if they're going to cut rates, because they're being cautious now to make sure that things are cooled down before they cut rates. So their own interest rates are now going to be on the downward spiral. There's no doubt about that. The signaling is clear. So they just want to make sure that everything is stable before they begin to cut rates. So we should follow that amount. So you go through a period of tightening. You have 93 trillion naira out there in money supply right now. That's a hell of a lot of money. You need to tighten and, take control of that money supply. And, on a short term, 6 to 9 month frame, after that, we can now begin to ease our rates to be able to achieve growth. And let me tell you something, Nigeria has done this before. In 2011 and 2014, Nigeria's economy grew in excess of 8%. At that point in time, inflation rate was between 11 to 12%, and interest rates were between 12 to 15%. If we achieve those parameters, I have no doubt, historically, it's been proven over and over in Nigeria, if you have those bands if you can keep inflation and interest rates to those bands I just mentioned, we will achieve in excess of 8% growth or more. So, it's not rocket science. The historical data, the regression analysis proves all these things. So you need to stabilize the inflation and reduce interest rates eventually to be able to get some sort of economic growth.
All right. And you don't think that the efforts at the fixed income market, we've seen attractive yields there. You don't think that can, contribute majorly to it, mopping up the money?
Well, if you talk to any investor in Nigeria today, and the reason why everybody's changing foreign exchange is that the yield curve is negative. You see, on the longer term instruments, inflation has eaten out the yields or the returns on those rates. So the OMO bonds that they've been starting to introduce is beginning to place, they're introducing bonds at an interest rate in which they're targeting inflation to be. So the challenge is that if I'm going to invest in an instrument today, can you assure me that if I invest in an instrument at 23%, can you assure me that in a year's time, inflation will be 21%? That is what you call confidence. If we have the confidence in that market, then you will make that investment today, knowing that the central bank will be able to reduce inflation so that you can make a return. Nobody wants to make a loss. And as long as the yield curve in Nigeria remains negative, because inflation is higher than interest rates, real yields, real returns are negative, people will continue to look for alternative assets, and which is now foreign exchange.
All right, thank you so much, Mr. Debajo, for that 700 basis points. Well, we will watch and listen and see if the MPC can do 700 basis point hike on the MPR. Thank you so much, Chief Executive Officer of CFG Advisory, for your time and thoughts.
Thank you.